All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is the 30th of June, 2025. Ladies and gentlemen, welcome to the last trading day of June. So, ladies and gentlemen, I wanted to quickly pick up on a few economic data sets which are happening this week, and I think that this is these are the most anticipated data sets, and I'm talking about the U.S. job numbers, and I'm talking about not only NFP but also JOLTs and ADP. So look, about all this and a little bit more in a moment. Just let me quickly read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I'll give you a few seconds to read the rest. Basically, as always, these videos are meant for just kind of to support your own analysis, your own research, and just maybe to kind of tell you something about something that maybe you forgot to look at and stuff like that. So basically, it's just like a reminder and stuff like that. Anyway, ladies and gentlemen, also before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, economic calendar, and today is Monday. Like I said, yes, the last trading day of June. Tuesday, the first of July, and yes, of course, we have a bunch of data this week. By the way, if you forgot, Friday it's a day off for the U.S., so the U.S. will be away, and that's why we are getting the NFP on Thursday. So keep your eyes on that one. But Tuesday, let's start off with that one. Tuesday, we're getting the U.S. JOLTs, so JOLTs job openings, and we are expecting a little bit of a drop in that number. So, of course, in a way, not very good. We have been seeing a little bit of a decline. Let me just launch the chart here. Let me just put this very quickly. There we go. So we have been seeing, there was a little uptick last time, but overall, the trend, as you can see, is to the downside. And yeah, like I said, we are expecting a 7.3 million number here. So anything, if it comes out suddenly below the forecast, well, I would say the current rally in indices could maybe get a bit of a slowdown moment. So look, for now, let's just keep an eye on this. Then also, of course, on Wednesday, we're getting the ADP figure. By the way, don't forget about the MBA 30-year mortgage rate. That's going to be quite interesting. But the ADP number is, let me launch this chart as well, is also, I mean, it's not also, but it's expected to come out a little bit on the higher side. There we go, just a sec. So we are expecting to see this one a little bit on the higher side, because last time it was 37K, a little bit of a bummer, a little bit of a too low of a number. So what I'm saying here is that for now we have a little bit of a jumpy moment here, and going into Thursday when the NFP is going to come out, that one is expected to come out a little bit on the lower side. So again, a little bit of a jumpy session, right? Jumpy week, jumpy numbers. Look, my problem in all this is that yes, JOLTs are kind of one indicator, but it has been declining. Look at ADPs. ADPs have also been declining for quite a lot now. Look at the 2021 area here. We were like around 1 million at one point. In July of 2021, we were around 1 million. Now we're barely staying afloat above zero, and I think that this is the concern that we're getting. NFP's similar story. Look, I'm not talking about this major dip right there. That was the COVID time. That was a little bit of a different story. That was a shock. But here we are having a gradual move to the downside. And if you would be a technical analyst analyzing these charts, then okay, the NFP number is below all the EMAs here on my daily chart. The ADP is below that as well, and JOLTs are also dropping. So in a way, like everything seems to be quite on the negative side. Look, with ADP and NFP, my problem is that we are, like I said, barely kind of staying afloat above zero. And I think we will get to the point where it will come out lower than zero. It will be, I think ADP probably will be the first one to drop there. So, but of course, an economic downturn is required. For now, it seems like we're slowly getting there, but hey, keeping an eye on the numbers, of course. The current expectation for the NFP is for a lower number, as I said, but still within the hundreds. If it comes out somehow below the 110, and the same story, let's say like this, JOLTs come out somewhere similar to the forecast, and that's, like I said, that's already below the previous number. The ADP comes out, let's say, the higher than the previous 37K, but it comes out, let's say, lower than the forecast, also negative. And then we have the NFP, which is on Thursday. If it also, let's say, comes out somewhere close to the forecast, that's all negative in general. It's a little bit of a bummer in that case for the economy, and in a way a little bit of a bummer for Jerome Powell. Not trying to doing the White House attacks on him, but in general, just to kind of, it's. I think he will get attacked a lot by the White House if we see job numbers not in a good state. So, in terms of how this could result with the instruments, with different asset classes. Now, let me just jump into the US dollar very quickly. So, the US dollar is, today it's a little bit slight recovery mode. However, overall, we dropped below the 97 mark here, and we still remain below it. So in general, looking at this from the technical perspective, everything's looking quite bearish. And to be honest, in my webinars and my videos, I said that I am kind of leaning towards that $95 mark. Look, they need cheaper dollar for now, because again, they want to make exports a little bit more attractive for other countries. U.S. exports more attractive for other countries, and of course, the weaker dollar kind of making imports into the U.S. A little bit more expensive. So that's what we're going here. That's what we're going for. It seems like that. Then that's at the moment. I think that we could see some more action to the downside for the US dollar. Of course, anything can change. I think I will shift my attention to some higher areas if we do start popping somewhere above the 98 mark. If we do that, then maybe I'll consider a little bit of a retracement back to the upside. In terms of commodities, gold. By the way, before gold, let me just jump into Forex. So you can see that USD JPY has been on a decline here. USD CAD is somewhere, it's stuck a little bit, because again, it's a bit of a battle between the two right now. Canadian dollar is on the weaker side given the drop in oil price. So it seems like US dollar was declining against the Canadian dollar for some time now, but now given that oil is declining, and is kind of making Canadian dollar on the cheaper side, and because they have their friction right now, the two countries, the trade friction. So in a way, it's not really making Canadian goods cheaper. So and they're not making US goods cheaper, and making Canadian goods also cheaper. So it's basically this very interesting moment where like the U.S. maybe was thinking that they're gonna make Canada's stuff more expensive for the U.S. consumer, but it's not really working, because they're kind of in the same, the two currencies are in the same kind of problematic path. So, and like I said, that's why it still is okay to import from Canada in a way. It's like you're not really it's not, the Canadian goods are not really getting that expensive. Anyway, so coming in, looking at Euro USD now, this one's very interesting because look, the euro has been on the stronger side against the US dollar, and certainly looking at this technical picture, we're seeing that yes, we've managed to reach the upper side of the rising channel, but now we're seeing a little bit of a decline. That's fine. This is what I was talking about in my videos, and which you can find in our YouTube channel. And this is where, like I said, maybe a little bit of a retracement could be possible. However, while we remain inside the rising channel, I will stick to the trend, and the trend is to the upside. So let's see, because in general, I'm kind of aiming for that 120 zone overall, but again, before reaching that area, anything could happen, and we could reverse back down very sharply. So let's keep an eye on this one. So yes, I want to quickly jump into gold. Gold is on a bit of a down move here, and I talked about this previously. It said that we could be forming something of an ascending triangle. However, if the lower side of this ascending triangle breaks, there we go. Then this could open the door to some lower levels, especially if the price remains below the 50-day EMA. Shown here is the green line, and so far so good. So now the question is, like, if we can remain below that 50-day EMA, then my next target is actually the area very close to the 100-day EMA, or this 3,167-68 zone, somewhere around there, because again, maybe we're forming a very big range for now on gold. So let's see. Of course, overall, I would say I'm still bullish in gold, but even if we are forming something of a range here, we look at the prevailing trend. The prevailing trend was to the upside, so a greater chance for this one to break out, it would be to the upside. But again, a confirmation break above the 3,430-40 zone is needed. And very quickly on the US indices. So yes, I'm looking at the cash here. S&P, NASDAQ, beautiful all-time highs. And as I mentioned this morning in my Markets Talk webinar, look, if we follow the theory that all the three indices need to reach an all-time high, the S&P and the NASDAQ already did. So if we are looking at still looking at this for Dow to reach the all-time high, so it needs around like 2.3%. And until it could reach the current all-time high, and it's quite doable. It's okay. That means that maybe the S&P and NASDAQ could also make that way as well, into the uncharted territory. So let's keep an eye on this. Of course, like I said, it's quite interesting. It doesn't mean that for sure all three all the time reach the all-time high, but it has been some sort of a tendency throughout the past few years that I was noticing this. But again, we all have surprises. We all have, a break of a trend. Anyway, ladies and gentlemen, I hope this helps. Like I said, I wanted to record this video just to inform you that we have the JOLTs, ADPs, and NFPs coming out this week, Tuesday, Wednesday, Thursday, respectively. And you need to be very careful. And of course, we could see some crazy action. It's the end of the month, and at the same time, it's the beginning of a new month. So, ladies and gentlemen, thank you very much. Let me know in the comments what you think. As always, stay safe, have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. I'll see you later. Bye-bye.